Hello traders, in this lesson I want to talk about the power of the pin bar. Now, as most traders know, the pin bar is probably the most common and the most traded single candled price action signal that traders trade, and for good reason, because it is a high probability signal and it has the ability to warrant the trader a very high probability setup indeed, as long as there are other confluent factors involved and not just the signal by itself. So before we get into the characteristics of a pin bar and what to look for, and by the way traders, this is not a full-blown lesson on how to trade pin bars. This is not a full-blown tutorial on everything about pin bars. That is available to my subscribers as part of their subscription, as part of their educational material. We go into a deep dive, all things pin bars. But let me say from the outset that trading the pin bar, in particular the reverse pin bar as opposed to an inline pin bar, is my number one, or is my favorite trading strategy. That is because it's a high probability strategy, and the reason it's a high probability strategy is because it's a self-fulfilling prophecy. Millions and millions of traders are well aware of the power of trading the pin bar. So therefore, when these traders see in particular reverse pin bar form, then they enter the market, and of course by the sheer numbers of traders enter the market and the volume that creates, that in turn makes the pin bar a very, very reliable signal to trade indeed. Now, pin bars are best traded as a reverse signal. They can be traded as a continuation signal, but in my experience, the best pin bars to trade are what I call a reverse pin bar. And I'll get onto that in a moment. The second thing I want to cover is trading pin bars on the higher time frames are far more reliable than trading pin bars on the lower time frames. So for me, my sweet spot, the time frame that I spend 95% of my time on, is the daily time frame, because I know that a pin bar, or I should say a reverse pin bar that has formed on the daily time frame at the end of New York close, which is the official end of all the trading sessions over that trading day, I know that that pin bar carries more weight than a pin bar that has formed, for example, on the 30-minute time frame. So I just want to make those 2 points. So let's have a look at the power of the pin bar. As we can see here, traders, on this chart we have the Australian dollar, Swiss franc, and the very first thing that you would do on any chart, of course, is to identify your support and resistance areas. So for the sake of this example of this video, I've identified this resistance area all through here, through this multiple touch points. This pair, the Aussie dollar Swiss franc on the daily, has been in a long sustained uptrend, and then we had this long period of consolidation where price was just going sideways, resulting in this resistance around this 67057 area where price had struggled to break through. We can then see that price broke through, price closing above this area here, which is the top of this range, the consolidation. And then we have this signal just here. So let's zoom in and have a closer look at the signal. Here's our signal here. This is a reverse pin bar. Why is it a reverse pin bar? Because you can see price was, here's our top of our consolidation range, price broke through the range and then reversed back down. So a reverse pin bar is simply this. It's simply a pin bar that forms after a retrace or a short correctional move or a pullback in line with the overall underlying trend. So on this particular pair, we have an uptrend, price then stalled, going sideways. This is the top of the range, of the consolidation range. Price broke out of this range here and then reversed back into the body of the range or the consolidation area, resulting in this single candle here, which is the most powerful of all the single candle formations or setups, being the reverse pin bar. So the reverse pin bar is clearly identified by having a very long wick and a very short tail. So the characteristics that make up a pin bar, first of all, is the wick or the pin, whatever you wish to call it, is somewhere around 2/3 the size of the body of the candle. So we can see here that the pin or the wick is about 2/3 the size of the body of the candle. Now, most traders who trade pin bars know that. The other characteristic is it stands out from all of the surrounding price action structure. You can see this wick here, this pin bar wick, it stands out from all the other candles that are surrounding it. So it's very obvious. The wick alone makes it obvious. And the longer the wick or the longer the pin, the more relevant or the more stronger the pin bar becomes. And you can also see, as I mentioned, the very short tail, and we have the very short body. So what does this actual signal, this candle, tell us? It simply tells us that in context of the uptrend, we had the sellers come back in the market and try and push prices back down into the range of this consolidation or of this range bound period, if you like, only for the bulls to come back in and push prices back up and close price above the high of the range bound zone or the consolidation period. So this is why pin bars are best traded as a reverse signal or a rejection signal. First of all, you have the intent of the sellers, in this case, trying to push prices down. The buyers came back in here at the low, didn't want anything to do with it, come back in the market in big numbers and push prices back up. So clearly at the end of this trading day, the bulls won the battle between the bears and the bulls. The buyers won the battle because the sellers wanted to push prices lower. The buyers didn't want anything to do with it. They were happy to come back in the market and close price well above this previous consolidation range here, creating this long pin or this long wick. This is a very dominant bullish signal. So guys, to determine a bullish pin bar from a bearish pin bar, it's really quite simple. A bullish pin bar has a long tail or a long, a long wick or a long pin below the body, and a bearish pin bar, which we'll look at in a moment, has a long wick or a long pin above the body. The body itself is very important. When choosing a nice looking pin bar, you want the body to be as tight or as close as possible. You want the open and the close to be very, very tight or as close as possible. That gives the pin bar more weight. Once again, it shows the track of the market. It shows the current order flow of the market. In this case, again, we can see the sellers push prices down here. The buyers came back in and they closed price above the open of the price, making it a very dominant bullish pin bar. So The way that you trade pin bars, and we'll look at more examples in a moment, but the typical way that most traders trade the pin bar is they would enter a stop order. So if you saw this pin bar here form, and this pin bar has formed at a previous event area, in this case it was this previous horizontal resistance in line with the uptrend, most traders place a buy stop just at the high of the mother bar, beg my pardon, of the pin bar, and their stop loss is generally placed a few pips below the low of the pin of the reverse pin bar. Now, of course, there are other entry methods which I teach my clients, but that is the most generic and the safest way to enter when trading a reverse pin bar, is to simply place, in case of an uptrend, a stop order at the high and your stop loss just below the low of the pin. So in looking at more examples, we can see we have just visually another pin bar form here, another bullish pin bar, very similar to this bullish pin bar. Once again, we can see that the sellers came into the market, pushed prices down to this low here. The buyers came back in, didn't want anything to do with it, and pushed prices up. And when we had price close, eventually at the end of the trading day, above the open. Once again, in this case, a very dominant bullish pin bar. Let's have a look at where that formed on the charts. We'll just go back. So first of all, here is our first pin bar just here, where we have a key horizontal significant level on the charts acting as resistance, where we had the pin bar pull back into this resistance zone. It closed above it. We have the long wick showing that all the sellers have given up, the buying momentum has taken over, and of course that was the catalyst for price to continue the breakout of this consolidation. Well, what about our next pin bar here? Where did that form? Did that form at a key event area on the charts? Because you don't just trade a pin bar if it doesn't form at a key event area, and of course in line with the underlying trend. So we know that we're in an uptrend and we have a bullish pin bar. Did it form in no man's land, or did it form at a key event area? So to do that, obviously you need to understand how to draw your support and resistance areas. So if you have a look at this, you can see we have this swing resistance here. We'll just move that a bit, play with it. Somewhere around here, you can see we have this swing high where price rotated back down from. And you can see that this bullish pin bar formed around this 67417 area. Now, here's the thing about support and resistance. They are areas. They are not to the last price point. So in this instance, we have a bullish pin bar, a reverse bullish pin bar because price has gone back up, and we've had the correctional move back down. Price has to go back down to go back up, and vice versa. And then we have this pin bar printed here, but it didn't quite hit the 67417 high of this swing point reversal here, this swing point resistance area. That's fine because they are areas only. Sometimes you'll find a pin bar will hit directly at an area. Sometimes you'll find it will overshoot the mark. Sometimes you find it won't make the mark. As long as it comes to around the area of your support and resistance, then it's a valid price action signal at a valid area. So here we have another bullish pin bar. Once again, you can see it stands out from the rest of the surrounding price action to our left. The long pin makes it very obvious to spot. So the longer the pin, once again, the more relevant, the stronger the pin bar is. Not all pin bars have to have long pins, but the longer the pin, the more relevant it is. So here we have another bullish pin bar Once again, if you were to take a standard entry, which would be a stop, a buy stop just at the high, you would have been triggered by the candle the very next day, and your stop loss is just below the pin. And obviously this would have gone on for a very, very nice win for those traders who traded the bullish pin bar. Let's take another example, staying on this pair. So whilst this pair is in an uptrend, we can then see that price consolidated through here, this kind of choppy movement before it starts heading back down. And then we have this consolidation zone here. Now we know the second irrefutable law of trading is after a trend, price relaxes, it consolidates, it catches its breath, if you like, before it generally takes off in the direction of the trend again. And what do we see? We see this beautiful looking reverse bearish pin bar just here form at, once again, another resistance area through all these touch points here, which was acting as resistance. In this case, we can see the bearish pin bar overshot the resistance through here, where the buyers want to take control, push prices above this resistance, hopefully trying to turn that into support. Again, it failed, only for the sellers to come back in and keep prices below this resistance area. And you can clearly see that was the catalyst for this future direction to the downside. So you need to be aware when you see pin bars that have a very, very long pin or a long tail and a very short body. That is the definition of a very well-defined pin bar, but it needs to form at a key event area, either static support or resistance or dynamic support or resistance. So on that very topic of dynamic and static support and resistance, let's go back to our original bullish pin bar just here. Once again, price is in an uptrend, it retraces, therefore reverses, and prints a bullish pin bar just here. Let's see how this interacts with the dynamic support or resistance. We already have it interacting with static support and resistance, being this resistance all through here. But let's see if we have another confluent factor, seeing if this pin bar formed at dynamic support and resistance. Dynamic support and resistance, of course, is our EMAs. So let's just overlay our moving average. Here we have the exponential moving average 21. I like to use a 21 period moving average because I trade the higher time frames, and we can see straight away we have another confluent factor. First of all, we have the trend. We know price is an uptrend. We have the level being static resistance. We have the signal being the bullish pin bar. And then we have the fourth confluent factor where this bullish pin bar has been rejected by the 21 period moving average, acting as 21-day dynamic support. So in this instance, of course, it would have turned out perfectly, but you would have had four confluent reasons to enter the market, not just because you saw the signal here, but because the signal formed in context with the uptrend. It formed at a horizontal event area, in this case resistance. It also formed at dynamic support, being the 21 period moving average. Let's have a look at our second opportunity to enter the market. If you missed this trade here, you had a second opportunity here through this bullish pin bar. Once again, the uptrend resumes. We have the pullback or a correction or a retrace or a reversal, hence a reverse pin bar. And then we have our signal form. So let's just see where this formed. Now we already know that it formed on or around our previous swing point resistance area, but let's look for more confluent factors. Did it form at a dynamic support or resistance area? So let's apply our moving average once again. Now, I use 2 moving averages when trading the higher time frames, the 21 and the 50. So let's just apply our 50 period moving average and see what happens. Bang, have a look at this. You can see that our bullish pin bar has also been bouncing off our 50 period moving average, acting as dynamic support, giving you another confluent factor to take the entry based upon this bullish pin bar. So traders, without getting into a long-winded lesson about pin bars, when you see a pin bar form, and a pin bar is characterized by having a long pin, generally around 2/3 the size of the body, where it stands out from the rest of the surrounding price action. And if it is on a pullback or a retrace in line with the underlying trend, and if that pullback or retrace happens to form at a key horizontal support or resistance area, then that's enough for you to warrant entering the market. But also, if you overlay your EMAs in case of trading the higher time frames, the 21 and the 50 period EMAs are very effective. If you also find that pin bar is reacting to that EMA, where that EMA is either acting as dynamic support or resistance, depending on whether you're long or short, then you have more than enough factors to enter the market to warrant taking the trade, knowing you have multiple confluent factors and the power of the pin bar. By virtue, that's a self-fulfilling prophecy where a lot of traders know how to trade the pin bar, and a lot of traders would have entered the market based upon this bullish pin bar here. Therefore, huge buying volume. Price can only go one way. And if you know how to trade the pin bar, then you would have been amongst those traders on the right side of the pin bar. Let's have a look at one more example. We'll go to our Euro Australian dollar. And once again, without me even showing you, it's pretty obvious where the bullish pin bar is. First of all, what is price doing? We can see price had been in this consolidation zone all through here, just in this choppy sideways movement, not going anywhere. We can see that we have false breaks here, false breaks all through here, and then we finally had a close, another false break here, and then we finally had price closing above this consolidation through this candle here. And then price went on, of course, to trade above this consolidation resistance all through here at around 156,256 level through here. Then we have the structure, higher highs, higher lows. Then we had the pullback, the retrace, the reverse, and we had this very well defined reverse bullish pin bar form just here at this key resistance area, now turning into support. You can't miss it because the pin is 2/3, more than 2/3 the size of the body. We have a very small wick above the body of the pin bar, and it stands out from the rest of the price action structure previously. It's obvious, it stands out. So again, the typical entry would be a buy stop at the high. You would have got triggered on the very next candle probably, and your stop loss would be at the low. You were never in any danger. And if you had your take profit targets at any of these previous turning points, previous resistance points, you would have made a very nice profit indeed, simply because you could identify a reverse pin bar form at a key event area on the chart, and it's a well-defined pin bar because it has a long body, a long wick or a long pin, and a very small shadow and a small body. In this instance, once again, you can see the sellers try to push prices lower back in to this consolidation range. The buyers didn't want anything to do with it, pushing prices back up once it got to this low here. So the net order flow, the result of the trading day of this candle here, is the buyers are well and truly in control. So by entering the market based upon this bullish price action reverse pin bar, you are on the side of the net order flow, what we call net order flow. In other words, you're on the side of the momentum on the market. So in summing up, again, this is just a very brief overview, but the pin bars, the reverse pin bars, wait for a pin bar to retrace or pull back into a key zone, a key support or resistance zone before you enter the market. But when you do have a well-formed pin bar, that tells you the bias of the market, the mood of the market, where either the buyers or the sellers are taking control over that trading day in context of the underlying predetermining trend, and you have a very high probability trade on your hands. So once again, traders, this is just an overview, but I do want to make you aware to keep an eye out for candles that look like this, either bullish or bearish, with a long wick or a long pin below the body. That's a bullish pin bar. It can have a bearish body, that's fine. As long as the wick or the pin is below the body and stands out around 2/3, then you have a bullish pin bar. Or alternatively, if the wick or the pin is above the body by about 2/3 the length of the body, then you have a bearish pin bar. And again, if that pin bar has formed on or around a key significant event area, be it dynamic support or resistance or horizontal support or resistance, you know you have a very, very high probability trade on your hands indeed. Anyway, traders, I want to finish on that. If you do want to know the full-blown ins and outs on how to trade pin bars, how to trade reverse pin bars, the characteristics of pin bars, everything that you need to know to trade this particular setup, this is my #1 go-to. I have made more money trading reverse pin bars than I have any other strategy ever. Then simply you can become a subscriber. You can simply join me and other subscribers, access to our educational content, and certainly reverse pin bar strategy, my #1 strategy. I go into a lot of detail on how to trade it, but for now, just keep an eye on any signals that you see that look like this. They have to have the long, just to repeat, the long wick as opposed to the body, 2/3 the size of the body. It must stand out from the crowd. The most obvious and best pin bars to trade are the ones that stand out. You cannot miss them when you look at your charts. Anyway, traders, I encourage you to become an expert at trading pin bars, in particular reverse pin bars. Reverse pin bars have a higher degree of success than inline pin bars. Inline pin bars are simply pin bars that form in line with the trend but haven't reversed. Wait for price to retrace, pull back, wait for the correctional move back into a key horizontal support or resistance or dynamic support and resistance zone. And if that pin bar forms after that pullback into those zones, then enter the market and you have a high probability trade on your hands. Thank you, traders. Talk soon. Bye for now.